Hi, and welcome to the Market Alert for Wednesday, the 5th of November 2025. So stocks, gold, credit and crypto crushed as Hunt for Laggards hammers the Magnificent Seven. The S&P price earnings multiple is nearing levels it has seen during each of the past two tech bubbles in 2001 and 2021. US stocks were pressured amid tech selling on valuation concerns. And Nasdaq led the declines as Palantir shares were hit despite reporting a stellar quarter and raising guidance amid concerns regarding their elevated valuation. And how much of a bubble are we in? USB strategist exposes warning signals of a peak. The rationale for the bubble in our mind is much clearer than it was in previous bubbles, so that's interesting as well. I also found this is the debt to equity ratios of direct AI stocks, and you can see there's a bit of a problem with Oracle, which is 520% of debt to equity ratio there. So slightly alarming. There's something brewing below the surface. And if we have a look at this is the overnight repurchase agreements, Treasury securities purchased by the Federal Reserve in the temporary open market operations. If you look here, this is going back to September 19 when they spiked to a level of 61. And all of a sudden, on the 31st of October, we saw this spike once again. Now it has dropped, but this is again indicating something is going on below the surface here. Something isn't right, and with those sort of valuations in the AI sector, it looks like something is looming, and it's not going to be pretty if it all starts to break up. But there's obviously an issue in the banking crisis. Through this chart into AI, just to see what its opinion was and to summarize it, and it's quite revealing. So what are we looking at here? When this chart spikes, it means the Fed is temporarily stepping in to lend cash to the banking system because someone or several institutions are short of cash. It's a short-term pressure valve, not yet a crisis, but persistent spikes hinted underlying fragility as far as funding markets and preceding broader financial stress. So that's where we are with this. So we're going to keep an eye on this just to see if it reverts back to normal. It has spiked back down as well. So there's obviously some liquidity being injected behind the scenes by the Fed. But it seems like there's a few issues going on behind the scenes. Economic news for today. Well, we've got the ADP non-farm employment, but that's whether if they get released or not because of the government still being closed down. That's the US government, the Bureau for Statistical Figures, etc. is still closed at the moment. And let's have a look at the markets then, see what's happening, see if they're taking on board what seems to be the cracks appearing behind the scenes, and kick off with the Dow. So in the Dow, we had a down day yesterday, down towards the 78%, and also the 20-bar moving average where prices found support. We have demand as well coming into the market. The momentum is still moving to the downside though, so it's taking a bit to catch up, which it will because it's a delayed indicator. But overnight, the market showing an inside bar there, not trading down to yesterday's low and trying to move back to the upside. If this is going to be the case, then let's just have a look and see how far we can manage to push the momentum to the upside and put in a few fib retracements there from this high rather, where you got the first pink line, which is the pink lines down to the low and then back to the upside there. 30-minute chart decline yesterday in the pre-market and then a bounce when the futures kicked in. Bit like the first hour from 7 a.m. to 8 a.m. for the DAX, and then we move the cash market to the upside where it then pulled back and then pulled back overnight. But since we declined down to this level, we see some buying coming in with demand there and moving the market back to the upside. And in the German DAX, it looks like overnight we've traded down towards the 200 MA, where the market has bounced off this level. Also the 78 and 89, the market's come back from those two. and starting to move to the upside. In the 30-minute chart for yesterday, we had a decline to begin with all the way down to the S3. As I've said before, on many occasions, 99% of the time the market will stop at the S3, move off it, which it did, traded back up to the S1, where weakness then came in with some selling pressure, and then we see the market decline. We had a gap overnight which has been filled, and the market heading back towards the DP, but struggling at the moment with the 50 EMA, where there's a bit of resistance there, so we could see prices slip back a bit at the open. And back to the US with the S&P 500, this too also making its way back sharply overnight, having traded through the 62 and headed towards the 78, and now making its way back. Yesterday again that same decline, and then the cash market pumping the market up to the low of Monday before we had another decline overnight, where we see a bit of a cluster of volume there, some stopping volume, and then moving back above the close at the moment. But again, expect a bit of weakness from this in first thing. So in the FT100, Rachel did her worst yesterday. As you can see, the market being brought down. I don't know what it is, but I actually sat and watched it. So she's got some sort of hypnotic grip. It's either that or it's a cure for insomnia. She certainly has a soporific tone to her voice, and and irritating as well. Not that I don't know her personally. I don't want to sit in judgment, but I'm just expressing an opinion after watching her yesterday. She's pre-warning us, isn't she? That's what she's doing. She's saying, look, I'm just letting you know ahead of time that I'm going to absolutely screw you all. So I'll hold a meeting, have a press conference, and I'll just drop a few bombs here ready for you so that you're aware. So forewarned is forearmed for her and for us, and I just dread to think what's going to happen on the 26th of November. But we're not going to have to wait too long, are we? What we're up to the 5th, so 21 days to go. Like I say, for me, I think it's going to be catastrophic. This is unprecedented, where you get the Chancellor coming out a couple of weeks before, or 3 weeks before in this case, and preparing you for manifesto failures, to say the least. And again, it's just, we'll just have to wait and see, won't we? Anyway, the market was down yesterday, but recovering overnight. Maybe they think it's not going to be as bad. And it's one of these cases of like, we'll put out the bad news, and then actually it'll all be fine. It'll all be good. I very much doubt it, but that's what it makes you think. So yesterday she spoke for 15 minutes or whatever it was. The market then rallying back after this, because maybe they thought, well, it's not as that bad. We can actually bring the markets back. Overnight, though, we saw another bit of a move to the downside, and now moving back up there as well. So over to you, Rachel, on the 26th, but it's not looking good based upon what she was saying yesterday. She's just priming everybody for bad news. Let's have a look at the US dollar. And in the US dollar, we're already through the 100 level by the looks of things. Yep, we're just, I think we are, yeah, there you go, it says there, isn't it, 100 and 1.66. So moving to the upside. I thought this would have had more of an impact yesterday on the metals, certainly with silver. So let's have a look at how they traded yesterday. So yesterday we saw the silver market move lower down to the 50 EMA. I spoke about this yesterday, that it was likely to happen. I'm still not convinced of the upside. It depends how aggressively we see the US dollar go through that 100 level, because that's certainly going to be used. Also going back to the repurchase rates as well. If that spikes again, that's likely to have an impact on the metals as well. Initially, then they'll reverse from that, because they'll be everybody will start looking for safe havens with no third-party risk. So yesterday, a bit of demand coming in. I don't like it, as you know, when the market starts to move up in the Asian session, because then it means that it's going to come in for a hammering later on. Usual culprits yesterday, you can see that's moved the market lower, LBMA price fix, and then the market drifting down overnight with a bit of buying coming in, and then spiking to the upside there and moving. But it's run out of steam, and again you can expect lower prices when the main broader markets open at 8 a.m. Gold also yesterday, no demand in gold yesterday though, but just drifting in a sideways move there. And the 30-minute chart showing again the chaps at the LBMA, the price fix, and then the spike up, and then all the way back down to retest it, and then up on the overnight in Asia. Let's have a quick look at the gold-silver ratio. So yesterday the gold-silver ratio moving to the upside, but overnight moving down a bit. Silver moving a bit, got more momentum than gold at the moment. So a quick look at yesterday's trades and what's happening overnight before I conclude. So yesterday, messy open as the market sold off initially and then started to move back to the upside. We had a sell signal there, but because all the damage was done here, the market then failed to move lower, turning around and the market spiking back to the upside and then switching to the downside once more and moving down to the S3 where the buyers came back in at this level which I mentioned earlier. It's an interesting level, the S3 level as far as pivots are concerned. We moved off that, traded up to the 200 MA, which you can see then caused a bit of a problem, and then prices sideways to higher. And then in the afternoon, very messy and very frustrating actually, because we started with a potential buy signal followed by a sell signal, and then the two losses, I just had to sit and watch the market move back to the upside all the way back up to the low. So one of those frustrating afternoons there, as you can see. But overnight we've got the market moving higher at the moment in the 2-minute DAX. Had some big spike in volume here, and then has now moved up towards the close. Expect prices to pull back a bit at the open, as the pattern seems to be the case at the moment. Certainly was yesterday as well. Right, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.